Alright, hey everybody, this is Jack and welcome to your Friday video. So the point of these videos is to outline the week and how we've been trading. I typically show you an hourly chart that goes back to Monday, and I'm going to show you the gap up. So on the left hand side here, this is basically the week that we traded. We gapped up, pretty bullish move there on Monday, a little follow through on Tuesday, and then the rest was just kind of more like digesting the entire move, ending up on Friday at 36.50. Now, did we make a fresh low for the year in the overnight session and last week? The answer is yes, 35.71. You can see that here, and we got really close to coming right back down to it. Now, that's important for later, so I'm going to keep this box up here. Now, what does it mean whenever the move completely evaporated? Well, it means this is a characteristic of the bear market that we've had for the majority of the year as we started out in the spring and started to sell off. Now, pre-pandemic highs are very close to where we are now. And as I draw this horizontal box, it kind of outlines where we could actually be going. We're really close to the pre-pandemic high at 3,400. But the question that I have is, have we crossed the Rubicon? Have we gone so low to no return back in to 4,000? Now, that's a straight up question, and I don't think it's an easy answer. But what we can do is analyze what makes sense if we were to go slightly higher. Okay? So 3,800 is kind of the beginning of the larger profile, volume profile, to the upside, right? 3,900 is pretty much smack dab right there in the middle. Now, we sold off after a pretty positive gap up, and that's the line in the sand. 3,900, 3,800 area. If we are remotely close to that, in other words, next week, especially on Monday, if we don't gap down, then we might have a chance of a late October short covering rally. Now hold that thought. What do we have next week? We have CPI and PPI numbers coming out. And on the 19th, we've got things like earnings coming out. I don't know, have you ever heard of a name called Tesla? So we've got Tesla coming up, and then we have kickstarting earnings for late October. And you can see here on the 19th, Tesla, it's officially going to be their earnings call. So all the stocks have gotten beat up. We've sold off. Now, is there a chance that we could sell off on Sunday and overnight futures into Monday and then hold the line at the lows that we put in on the S&Ps? That's what this video is about. That's what I want to talk about. I think it is okay if we come back down to 35.75 early next week, and if things do not completely fall apart, I think that is the buy side that I've been anticipating, and something to take advantage of going into the first week of November on the long side. Contrary to popular opinion, I know I'm very well aware of the strong arguments that say, Jack, we just put in a new low last week or this week, and 3,400 to 3,200 to those pre-pandemic highs just makes sense. Now, I'm all for that. The thing is we've got to keep kind of a clear lens and not bring in our personal biases. Now, I don't have a bias to the long side. I have an argument for a short covering rally into October, into midterm elections in November, and then after that, things falling apart makes a lot of sense. So this is more of a short-term bullish view that's not very popular. And here's the catch. If we do fall apart, where is there potential for a bounce, if any? Is it 3,400? Is it 3,200? Or is it significantly lower from there? So I think right now we kind of focus on a potential double bottom pattern that mimics the previous pattern that we've had or the previous selling that we've had. And I'm going to draw a circle around something that looks very similar to this. And it's right over here in June. Gap down, gap down. Consolidation, consolidation. Gap up to reject and go lower. Gap up to reject and go lower. But what happened here? We ended up selling off one more time, consolidation phase, slightly higher lows to higher highs, and then for the next 2 months, short covering rally. This is what I'm thinking, and this is what I'm trying to anticipate with you. I have an upside target again of 4,000, and if things got really crazy, we gap up, task completion, all the way up to 4,100, and then ultimately fail from there. I know, it's ambitious, but it kind of makes sense. Anyone that's a fan of Fibonacci symmetry, I don't need to draw it. That's pretty much what you're staring at. So it's an argument to the long side, but not based on, hey, strong positive market, everybody's bullish now. No, it's more about squeezing out speculators heading into a very volatile, weird moment in time where we could have downgrading, devalued, lower expectations in some of the biggest S&P names, and still things could ultimately be moving to the upside. We've seen it twice before this year. That's why I'm trying to keep an open mind and say, the short side is easy. Bearish market, lower highs, lower lows. We made a new low this week. Sell every move higher. I will not argue against that. I think it makes a lot of sense. But if you're a fan of deep in the money put credit spreads, if you're a fan of selling puts, this is your time to shine, and we'll see what happens because 3,800 and 3,900 have to be met first. If we do not get there, I can only say that we should anticipate a higher high to lean in on the short side. That's the S&Ps. Those are my thoughts. I hope it helps. The whole point of these Friday videos is to bring you clarity. Now, on the right-hand side, you see crude. Now, crude's had a huge move, 20 points in the past 20 days. Big move. I think it's going to continue. I have some upside targets based on Fibonacci 1272 extensions up to 96. And if we're going to go all the way up there, why would we not go and take out this right here? Unfortunately, I don't have a quant pivot level up there, and so it's kind of a stretch whenever you're expecting another huge move already, whenever you're existing at a second deviation. We have a micro squeeze that's worth considering for continuation higher. This is the only thing that I am, kind of strongly convicted to the long side. Crude, a lot of macro events, a lot of macro variables worth considering, but I think I'm locked in on crude. We've called the short from 120 down to 86. I think continuation higher is really the only thing that does make sense. And so we'll see. Again, CPI and PPI numbers coming out next week. We've already got non-farm payroll, and things were nasty today. S&P's down 100 points, NASDAQ down about 400, if I remember correctly, 450. So the big question mark is, are we going to fall apart? And are we going to make a new low? If we make a new low, I think it's going to continue that way. If we get bid up next week and we have a potential push into 3,800 into earnings, I'm expecting that short covering rally to happen. I'm expecting earnings to, oddly enough, be a catalyst for a bullish move into the first week of November. And if that happens, there's also an argument, and it's a stretch, back up to 4,100, back up to 4,200 on a short covering rally, kind of a more powerful push than expected. We've seen it before. A lot of these short covering rallies actually have extra power at the end of the move. It's just the way the markets move. So anticipating a lot. It's going to be super volatile, I think, around earnings, starting off with Tesla. Look out for the bad news. I think it's a buyable situation. We'll see how this goes. I'll see you next week. Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.